Howdy, this is Jay Life. Hey, welcome to the channel. Just want to welcome you to my very first video. Want to give you guys kind of a heads up of what we're going to do here. This is basically making the market, doesn't matter what market, Forex, crypto, stock market, commodities, whatever market, we're going to make it simply simple. Simply simple. We'll keep it like that. And so here we go. So real quick here, I want to talk to you about the basics of any market, which is basically market structure and price action. Market structure and price action. So when you're looking at candles here on a chart, move this out the way. There we go. Looking at candles here on a chart, these candles move up and down. Green are buying candles, red are selling candles, and the market just moves up and down based upon buyers and sellers. What actually moves the market? Orders. That's what actually moves the market. This is the the euro versus the Australian dollar. So around this time, which is about $1.47, there were a lot of buy orders down here. $1.47 must have been a good price. And so a lot of buy orders down here. So you saw the market come down here, bounce up, down here again, bounce up, down here again, bounce up, and down here one more time, and then it just took off. And so what that tells you is there's a bunch of orders down here around this level at 147 and the 837, which are pips or points. And so there were a bunch of orders right here. Market tried to get below there and it could not, and eventually moved up. This is basically a very simple explanation of market structure and price action. Price action. Keep it real simple. Buyers and sellers. Buyers and sellers. That's all these candles are. Buyers and sellers. And this is a price point here that the market was looking for. The buyers were looking for anyway. And once it got to this price, buyers bought up, they bought up, and they bought up, and they bought up. So as you go along in market structure, you're always going to see these points, these important points where buyers live or sellers live. They're waiting for a price. It's like just like when you go to the store or when you're looking online and you're like, hey, I really want these AirPods, but I hope they go on sale. And I don't want to buy them at 199. I want to buy them at 159. And so when the price goes down to 159, then that's when you basically hit your buy or execute your buy order. And same thing in the market. You got people who are waiting for specific prices, banks and institutions and things like that are waiting for specific prices. And once the market hits those prices, they execute those orders, whether it be buy or sell. And then that's what really moves the market. And so if you keep it real simple like that, you don't have to worry about trying to overthink it. What is this? What is that? These are simply buyers and sellers. Every green candle represents buyers trying to push the market up, and every red candle represents sellers trying to push the market down. The basics of any market is you want to buy low and sell high, and so you'll see that often too. But let's get back into it. So price action. What is price action? Price action is simply just the movement of a security, stock, whatever it is, over a plotted amount of time. That's all. So from here, this was June 2nd at 9:30 in the morning to here, that's price action. The movement of that price in a specific amount of time. And I'm on the 15-minute chart right here on TradingView. Just want to kind of give you kind of a real overview. So let's dive into it here. So price action. So we wanted to see how the price moved over this specific period of time. And as we saw, like I told you before, every single time the price came down to this area, there were buyers here waiting to push that market back up. This must have been a really good sale point or a good price point. The market was coming down. And once it got to this point, there was buyers here waiting and they pushed that market up. That is price action in its simplest. Doesn't matter where it is, what it is, doesn't matter. There's specific points in certain areas that buyers and sellers actually want the market to come to for them to actually get in. That's simply right there. Simply price action. So what is market structure? Market structure is basically building blocks, if you will. We'll keep this real simple too. Building blocks. There are certain points of the market where, think of it like this, floors and ceilings. The market came up, hit this ceiling, and dropped back down. And we'll keep it like here. Here's a floor down here. Boom. So the market came up here, hit this ceiling, and rejected and came back down. And here's a floor. The market spring loaded off and jumped up off of it. So if you keep market structure just like that, those are basically just building blocks. Support and resistance levels are where the market respond at. So through here, we're just kind of jumping up, jumping up, jumping up. Boom, then we come back down. We come up here. This is a reaction point for the market. Strong reaction. The market pushes back down, hangs out, and then eventually comes down a little lower, and another strong reaction point where the market shoots back up. So you want to keep it really, really in a simplistic way. These are basically just, I don't know if you guys remember that. I won't even say that. This is just a simple way to remember where the market's going, basically. Back and forth. You'll see these points all across the market. You may not recognize them initially, but the more we go, you'll see them even without these bars. You'll see them. You'll see like right here. I don't have a bar drawn here, but you guys see the market responding here pretty well. Down here also, and over here also. I drew this line here, but you guys can see that structure's down here too. And so that's all it is. Don't overthink it. The market can only go up or down. Because even if it goes, some people say it goes sideways. Even when it's going sideways, it's still going up and down, up and down, up and down. So the market can only go up or down. So trading is really, really difficult when you're trying to pinpoint reversal points and all these Fibonacci and all these special tools. We're going to keep it really, really, really simple here. Price action, support, resistance, and we'll take it from there. All right, everybody, we'll be back with another video very, very soon. This is price action and market structure. Thank you.